Hey, what's up everybody? Jeff Beers here from 40 Finance Channel. Just wanted to stop in and talk a little stock earnings, see if anybody's hanging out there, getting ready for the Facebook news, which I'm trying to figure out if that is live yet or not. I'm going to refresh some of my headlines here. And, basically what we're trying to do with this information with earnings is twofold, right? So when we start to hear from the biggest companies that are coming out this week, which is basically the FANG names and a couple other headliners, you're looking for like a trend between all of them that may not only impact the stock market as a whole, but potentially give you some insights for your own stocks as, how they might be trending. So for example, last week Snapchat came out and quoted as saying, that the Apple privacy updates hurt their ad revenue. That has everybody thinking potentially that Facebook might see some problems. So that's all we're trying to do is just put two things together and see how the market might trend. I see Kevin Hawthorne joined. Good to see you, friend. And I, at least on my screen, my striped shirt here is doing lots of crazy things on the camera. So I'm going to switch over to small view so that you guys don't have to get dizzy if my shirt is messing things up. And okay, so let's see what kind of stuff we got. And here is the Facebook. This came out at 4:13. So the headline, let me move this over a notch. Unfortunately, there we go. To click away to adjust the screen. Facebook misses revenue and guides lower amid Apple changes, but shares tick up. Okay, so Facebook saw an initial post-market dip, but has turned 0.5% higher as its third quarter earnings, and I'm just going to click on those. Okay, so EPS beats by 5 cents, but misses on revenue. So EPS, of course, is something that I follow very closely, and I think it adds fundamental value to a stock. So for me, GAAP EPS of 322 beating by 5 cents doesn't really change a lot of my projection for Facebook, at least not at this point. Revenue coming in at 29 billion plus 35% year over year, misses by 500 million. I don't really see that as a major negative either. But let's get down to some of these other things here. Monthly active users, 2.91 billion. Consensus was 2.92. We know that Facebook has had some trouble growing their user base a little bit over the past couple of quarters, so that doesn't strike me as a concern. The comments would be more interesting here. Daily active. So daily active is actually up by a hair versus consensus. Average family service users per day. Whatever that is, that's up versus consensus. Users per month, also up. Okay, so I see a lot of positives. CFO outlook. Ahead of the fourth quarter earnings call, we will share additional details about the reporting format, blah, blah, blah. We expect fourth quarter revenue to be in the range of 31 billion to 34. Right now, the consensus, it looks like, was 34 billion. So that could be what they talk about with a miss. Now, I already see an Apple in here, Apple line here. So let's see. Our outlook reflects the significant uncertainty we face in the fourth quarter in light of headwinds from Apple's changes in macroeconomic COVID factors. In addition, we expect non-ads revenue to be down year over year in the fourth quarter as we lap the strong launch of Quest 2. Okay, so that's the headset for AR, but that is non-ads revenue. So let's be honest here. Facebook is mostly generates money from advertising at this point. What's going on, Lion? I see you there doing a victory lap on Tesla. We'll talk about Tesla here in a second. So non-ads revenue, to me, that, whatever, Oculus, I have no doubt that that will continue to grow. It looks like, similar to a Apple kind of thing when the new iPhone comes out. In this case, the Quest 2 came out last year. The next year is typically lamer. So we'll see, if that holds true. We expect expenses to be maybe south of our prior outlook, so 70 to 71 billion versus 70 to 73. Full year 2022 expenses around 97 billion, driven by investments in technical and product talent. I don't think that's a concern. Facebook has a ton of cash flow and a ton of cash. Capital expenditures, 19 billion, updated from prior estimate of 19 to 21 billion. So on the low side of that. 22 capital expenditures, 29 to 34 billion. Investments in data centers, servers, network infrastructure, and office facilities. All right, we expect fourth quarter tax rate to be in the high teens. Absent any changes to tax law, we expect our full year tax rate to be similar. And that's probably just a call out because corporate taxes are, on the table with Biden as president. So the CFO is probably just saying like, hey, this is what we expect it to be. If we find out, that it's percentage points above that, then that would affect, what we're doing. All right, so let me see if there's anything in this. Just peeping through these other bullet points. I don't think so. I think what, this is what everybody was looking for right here. Oops, sorry. Was the Apple iOS update. That's what everybody was looking for on this call. Obviously, the earnings themselves are important, but it is continued headwinds is what Facebook's calling it. However, they basically hit their numbers. Okay, so that's a much different story than Snap was telling. All right, so not a different context because both companies said there was headwinds here. I think the difference between the two is Snap sort of fell short, or rather significantly short, and Facebook comes out and essentially hits their numbers. Even though this is a negative headline, it's a tricky headline because, again, GAAP EPS hits. So when you ultimately get to, and I don't know if they're going to have this updated already. All right, so when you ultimately get down to the fiscal year for Facebook that ends in December of 2021, I would say that this EPS estimate is right on track, right? And that's 39% growth. Forward PE, 23 if they were to hit that. So right now, I don't see any risk here. And as you guys know, the way that I track stocks fundamentally, if this EPS estimate becomes reality, then typically we are able to project an accurate stock price while we have to figure out what the valuation metric will be or how high people will pay from a PE standpoint. But this is a huge unlock. When you miss this number or you miss the pace to this number, it drastically changes how you would project a stock price, right? Because let's say this goes from 14 to 12, all right, just for fun, just for an example. And people pay on average, I'm going to try to make it easy on myself here, a forward PE of 20, okay? So if this was 14 times PE of 20, you're looking at a stock price of 280. If this drops to 12, and then you go to a PE of 20, the stock price drops to 240. And usually, if this number is starting to trend downward, your PE will trend downward because less people are interested in the story. So if you went from 12, not going to try to do this, 12 times 19, no way I'm doing that off my head, so I'm going to use my little handy calculator here. Went down to a P of 19, now you're down to 228. So significant changes when EPS changes. Same thing happens over here. When you look at price to sales, I think we not really rely on price to sales as much for Facebook, but I'm guessing even with today's minor miss of a half or $500 million, they're still on pace for this. So from what I've read so far, this was a good earnings report, one that we were all waiting for. I'm going to adjust this so you guys can see it better. This is just the Yahoo take on the same thing we were talking about. So here's our 1 year. Current P ratio of 24.41, at least on Yahoo. After earnings, stock is up plus 239%. So if you're a Facebook shareholder, I would be feeling pretty good. I think that in this particular case, there was more worry. There was a lot more worry about what could go wrong than there was positive sentiment. So I think you survived, is my 2 cents. All right, so Lion 95 is down there, and he's bringing up another headline that's going on in the market. I'll see if I can find a piece on it about fun. And DWACW, I'm not sure if I know that one. DWAC, and Digital World Acquisition Corp. And I'm guessing Lion is in this. Maybe this one just came out today. Is this an IPO today? Don't see it. But they're both tied to Trump. I am familiar with PHUN Fun, and I have seen this on many of Twitter conversation. This one came out roughly October 21, hit a peak of 18, currently down to 715. These are all momentum plays. This is I see another one over here, CEI. These are not fundamental plays, these are momentum plays, and if you do get into them, as I'm sure Lion can attest to, you have to be like tracking the crap out of them. Like it's an all-day affair to make money here. So just keep that in mind, but you may see headlines for Chamber Energy, you may see some things for this one, DAT chat that I've seen on some of the chats. But generally speaking, I would say there's not a lot of fundamental value behind here. But as you can see, Lion's celebrating in the comments. If you get a read on those companies early and they do gain momentum, then you might have a chance at something. All right, let me go back to headlines. Lion brought up the other one, which was right here. Tesla passes $1 trillion valuation mark, and congratulations to all Tesla holders. I am not one of them, and I have been a doubter, generally speaking, along this way. Let me try to make this bigger. But there's no doubting where we are today. And that's not going to work for me. And everybody who followed into this company, certainly from 2020 and beyond, should congratulate themselves on a great investment. I saw the momentum for Tesla continuing to build. You'd have to be blind not to. But obviously the valuation, and you'll hear a lot of people like me talk about the fact that it's arguably fundamentally unsound, I guess. But you know what? It's all about the price, and the price today finished, it says 998. I don't know if that's where it finished at. Oh, even higher than that, 1026. So it is on a rocket path right now, and it's nothing but good news. You had a rental car agreement for like 100,000 cars come in. You had a release of new software over the weekend, from my understanding, and that was widely anticipated. And, generally speaking, the numbers from Q3 were very good. So they're on fire right now. They're on fire. And if you saw me in the street and you said, buy Tesla now, I do not own Tesla, should I buy Tesla now? Generally speaking, I don't buy at all-time highs for myself. However, if you own it, you certainly aren't, I can't imagine you sell right now, right? Things are as hot as possible, and you have to just assume that the good times continue. If there's any risks in there, though, it is, and let's take a look. If valuation ever trends to normal ranges, okay? So I'll show you what I mean here. And to be fair, this has not happened yet at all with Tesla. So fiscal period 2021, EPS estimate, which I assume has been updated because they just had an earnings call, of 6. It's a forward PE of 167, not nearly as high as it used to be. Not nearly as high as it used to be. But let's just say, that an acceptable forward PE is 100, okay? For a company that makes cars, sells a physical product, then, that stock price would be $612, if you think that that is fair. Next year, EPS estimate of 820, and to be fair, Tesla's been blowing EPS estimates away for a while. I think this year was in the 5s, 550, something like that, and they're already inching above that. So if you got to 820 next year, let's just say things slowed down, and you say forward PE of 100 is again fair, which it looks like, that's about the level people project it'll trade at some point. Then the stock price is $820, okay, with the information we know today. But it is obviously trading above that. So will that ever happen? Will Tesla ever trade at what some would call a reasonable valuation? They certainly haven't yet. And if they got one thing going for themselves on valuation-wise, it would be down here in price to sales, okay, because popular stocks with a lot of backing, stocks with a strong storyline, it is not uncommon to see stocks like that trading above 20 times sales. I'm not saying that that's what you should look for, but 20 times sales is about where I'll stop entertaining stock ideas. And Tesla is projected to come in just below that here, and then next year drop into under 15, and that's on numbers that they've continued to beat. So the true valuation of this company is coming certainly into gear, and it's happened unbelievably faster than I would have ever imagined. And I don't think I'm the only one, but congrats to everybody who got in this stock early and essentially ignored my advice, just to be fair. I'm the only one who's transparent enough to say that. Good job, and keep grinding. All right. Check out if we have any other questions. John Spencer, the market seemed to like Facebook's results. It does look that way. It was ironic, and if, John, you just got here, where is that stupid news at? Here, they tried to build it on Seeking Alpha as a miss, right? And it was a miss technically, but this headline, it couldn't be more misleading. If you only read the headline in passing, and this happens on stock market sites all the time, misses revenue, guides lower, which, by the way, I didn't see that either, but shares tick up. And then you get down to the meat of it, and very little of that is true. 500 million short on revenue, but it beat on profitability. And in my world, that is a key consideration. So yeah, I think that the investors who own Facebook should be very happy with this. Spencer says up to 0.7 after hours. Yep. Armin, worst was already priced in for Facebook. I tend to agree on that. And I will say that, man, it's been a tough year of headlines for Facebook. So, and just to be fully transparent, I do not own standalone Facebook shares. Okay, there's plenty represented in my retirement accounts through things like QQQ, other tech conglomerate type ETFs. But when I talk about my portfolio and standalone stocks, I do not own Facebook. However, you may remember if you've been with the channel for a while that somewhere in the neighborhood of 240 and 250 this year, I was saying what a lot of people were saying, which is, man, this thing is, I don't know what else you want out of the valuation for a company, but this is an undervalued stock based on earnings alone. When was that? 240, 250, trying to find it. Yeah, so back in February, right after we had some of the problems after, was that after the election or in the White House attack and stuff? So you're right in this like 250 range, and man, that was definitely free money in hindsight. Now, what do I think about regulation and how those things will impact Facebook? I think, you know, they're treading on water, or thin ice, I should say, and it's hard to tell where that would go. I will say that censorship is very difficult here in America, okay? So some of the things that I would say the lawmakers ask for or the regulators suggest, it does kind of go across like freedom of speech guidelines. No matter how harmful it could be to certain groups and entities, they don't have like this cut and dry case, right? They don't have this cut and dry case that they could shut Facebook down or institute, let's just say, a large fine for certain things. At the end of the day, right or wrong, this has nothing to do with right or wrong. This has nothing to do with opinion here. I'm just telling you what the government regulators face. They face the structure of the law, okay? I would, at least from my understanding, I don't think that Facebook is breaking any laws. And until you charge a company with breaking a law, it's very hard, okay, to put the clamp on them. Now, we all know, I would say across social media, I don't think anyone would argue that social media, I would say most people are not going to say social media is the healthiest thing you can do for yourself, right? It's just, you know, looking at a phone can't be the healthiest thing of all time, and we all do it. So I'm not saying there aren't bad things, but you would have to make some changes to the law. And can you imagine a law that said, I believe like China tried to do on the gaming sector, try to say you can only watch, let's say, an hour of social media a day. I mean, can you even imagine how Americans would respond to that? So bottom line, Facebook probably does some things right, and they probably do some things wrong, and there's probably shady business going on in between every single company that's based on viewership and eyeballs. That I can almost guarantee you. But it's not just Facebook. And to date, they have not been charged with breaking a law. And so as an investor, you have a choice, right? You do not have to invest in Facebook if it doesn't meet your moral guidelines. And some people will argue that, and they can invest. So that's the cut and dry. I really am not a big fan of regulation. I'll tell you that right now. And I'm not just talking about Facebook. I'm talking about just about every industry. I'm not a big fan of regulation because I think it hurts open markets. So take that with a grain of salt. KS, do you think Tesla will split again? I mean, the last one went successful enough, right? And you'd have to wonder, with them being on fire right now, I don't have the up-to-date on the books on how they're doing with managing debt and cash position and whatnot. I mean, was it silly for Elon to go back to the well and print some more stock? I mean, today was an absolute just positive volcano come to a head for them. And it wouldn't surprise me. I think it would arguably be smart to come out and perhaps have a secondary holding, raise some more money for the future. I have no insight on that. As far as a split goes, they're right in that territory where you can make the argument that $1,000 stock, $2,000 stock, etc., the marketability of those numbers, it doesn't, I don't think there's any scientific evidence that Amazon at 3,400 doesn't generate investor interest because of the price tag. However, I think we all kind of know, I have Amazon that has a high price tag, and we all sort of know you don't, at least in my income level, I don't wake up and just, buy an Amazon share every day for the hell of it, right? Whereas if Tesla was, let's say $100 or Amazon was $100 stock, I think it's safe to say I would probably invest in it more often, just because losing $100 is just as not a big hit to the budget, but I've never seen a study on that. It would be interesting. So will they split again? It wouldn't surprise me. Are they going to do it before the end of the year? Probably not. And I wonder if there's a limit on how many times you can do it in a year. No idea. All right, what's your take on Shopify? Shopify is another stock that's blown up beyond what I thought was a reasonable value, but I am a realist and they've done it and they're doing well, and it is a stock that I follow. Let's see. Let me go to Yahoo first because I'm just better versed in where all their statistics are. All right, so Shopify earnings date is October 28th. That is what, Thursday? Thursday after close. You have a stock over the past 6 months. Let's just go year to date. In January 4th, there was a roughly $1,200. After a little run up the past couple days, you're at $1,400. Analyst expectations, $769 for this year, $771 next year. But this is definitely a sales story, growing 33%. I like the growth story. It's a little difficult for me to understand. Not because of the obvious. Like the obvious is, e-commerce is growing. People are starting websites. People are starting shop online. Like, duh, I get that. The prolonged growth rate is the one that I probably struggle the most with, just because of having a background in digital marketing and e-commerce development and whatnot. Like there's always a new shiny object in that space. Shopify is in the right space to prevent some of that because it takes, once you put all that shit together, it's so hard to unwind it, particularly at a high corporate level. I think that their current customers are in good shape, and I think they'll continue to add. I don't know what kind of growth is left in the, let's call it 1 year timeline from this current price of $1,400. So you can see where analysts are kind of going back and forth on what next year is. All right, so let's just pretend they hit 673. We'll get a feel for what sort of pace they're on on the 28th. Then I don't see the EPS going down, but let's just say it goes to 7. All right, so it goes up 27 cents. You're not making a ton of progress on price to earnings. Now, sales, whole different story. Sales, the outlook is phenomenal. Now, this is a pretty high number, okay? 38 times sales. If you're just joining, I went through Tesla. Hold on, it's right here. I went through Tesla about 15 minutes ago, and I mentioned one of the things you can say about Tesla is they're under 20x sales, which for a momentum / fan favorite stock isn't the worst thing in the world. I mean, most, a value investor isn't going to touch it under 10 until it gets at least under 10. But you see in comparison to Shopify, even if they hit 6.2 billion next year, they're still in the 20s, high 20s. So with Shopify, I think you're always looking, I wouldn't sell it if I owned it because I think that they've got enough positive momentum. As far as buying or starting a position, I think you're looking for a negative headline day if you're lucky enough to get one. Perhaps that day is the 28th. I don't know that to be true. But if they come in a little short on some things, that's a stock that I could see easily going back to 1,200, perhaps 1,100 if people are really down on it. And that's maybe when you buy. You don't buy the stock, though, unless you're holding for 3 to 5 years. That is the only way that I would get in it. I'll compare it in some ways to a stock I've been buying recently, Zillow, that was also absurdly overpriced and almost reached 200 if it didn't. Loved it. It just happened to be one that fascinated me. And then it finally popped on something. And when they said they weren't going to do as much home buying, it popped recently. And I've bought some shares of Zillow in the 80s, right? And that's not necessarily fundamentally cheap if you go by their metrics, but it feels a hell of a lot better than the guy who bought it $200, right? And I know that it's 3 to 5 years bare minimum on that one, and I'm okay with it. All right, Facebook is saying they're buying back shares. That's always seemingly good news and a good sign for the future. Now, Apple is a company that's been buying back shares and has failed to produce the investor return on that. You can search about and find Apple share buyback program, and not everybody likes it. I think in Facebook's case, it makes a lot of sense because their valuation is not out of hand, right? I don't think that Shopify should buy back their shares right now at 38 times sales, simply because they're getting a nice premium already. Cool Vips, I think market is relieved. I agree with that after bad news from Snap. I couldn't agree more. I think that the Snap earnings were in my head, and Snap was a stock that I was talking myself into a little bit because of just because of AR and some of the stuff that I know from my teenager at home. And I don't think it's the worst deal at 54, but I can tell you right in this short time frame, I'm not buying it, even though it hit a price that I think is more reasonable. Let me bring up their stuff for comparison. Let's see their price to sales, because we've been focused on that. And Snap has no earnings that I'm aware of. Yeah, 36 cents, 65, nothing really there. So price to sales, 21.78. All right. So I could make the argument on this single metric that Snap is a better buy than what we were just talking about. And the name has already escaped me. Who was that? That's so funny. The name, Shopify. God, like the name, I wanted to say e-com for e-commerce, but it was Shopify. So remember, Shopify was at 38x, Snap at 21x. They also get to the teens next year, potentially to single digits in 3 years. I would say, I guess, if I stared at it long enough and I was trying to be super honest, I would say that Shopify has a bigger moat without even knowing, without even doing any calculations. I would say Shopify probably has a better moat than Snap, just by the nature of their business. Like, businesses actually physically need to have these websites and shopping carts and stuff like that. Whereas Snap, again, social media under pressure, obviously way too dependent on what Apple was doing in light of Facebook's recent report. Can they turn it around? I believe so. I do think they have some really cool stuff out there. But when that negative report came out, I got to tell you, like, it soured my view a little bit. And it wouldn't surprise me if you get a social media weakness or another Apple weakness headline, and this one goes under 50 on the right day, and then maybe you're just throwing a dart at it, right? 100 shares. Let's just say 100 shares at $49. If you were to see that, that's $4,900, and put it off to the corner 3 to 5 years later. Where are you at? There's something to be said for that. All right. I hate Cool Vip says, I hate Facebook though, and I hope they go out of business. That's fair. Like I said, the social media stuff, when I went on that little rant about regulation and whatnot, I was just offering my perspective from the fact that technically they're not breaking any laws that I'm aware of. Cool Vips, Tesla has $16 billion in cash. Q3 free cash flow was $1.8 billion. They don't need to raise any money, which I think is a fair statement. But there's that, so it's an opportunity, right? If you're hot and everybody loves what's happening right now, they may not even notice a small secondary offering. So that was the only reason I brought it up. I wasn't, Cool Vips, I wasn't saying, and I appreciate you sharing the stats, I wasn't saying that they're going to go out of business without it, but in their business, which includes operating factories, opening new factories, potentially launching new models, etc., cash is nice to have, and it certainly does appear that maybe some of the economic tailwinds that we have from the Fed and interest rates and stuff, maybe those very slowly start to dry up and Tesla will appreciate the cash. I don't know. It was speculation, though, to be fair. Logitech, this is Bear, Logi earnings thoughts. So Logitech is interesting, right, because it is a pandemic favorite. This is keyboards, mice, gaming, whatnot. Let me see, did they report today? Doesn't say. I'm just trying to see when they were supposed to report, because here on Yahoo they don't have anything. Let me see if it's on here. So I think Logitech is a slow burn. Not necessarily a bad stock, just a stock that just is going to kind of blip along. And they have a preview. Oh, October 25th after market close, so it must be out. It's just not being reported yet. So unfortunately, I don't know. where they are. But this gives us some good stats. Consensus EPS estimate is $1.12, and this is the killer for any stock that's sort of a pandemic favorite. Minus 40% year over year. So analysts are telling you they expect a huge drop in year over year revenue. The consensus, or that's EPS consensus revenue estimate, however, is only minus 1.6 year over year. So for some reason, EPS is getting slaughtered this year, at least from a projection standpoint. Revenue, however, is flat to down slightly. Unfortunately, when your EPS is trending down, sometimes that's because you're doing good things. You're opening capital expenditures, to build new products, whatever. So it's really hard to tell from this article. However, the fundamental value of your stock certainly does go down in that time because it just doesn't have the support. And here you see Logitech at 132 on May 31st. Last year at this time, they were at 84, so they're kind of sort of flat. It's the 5-year. Here's the pandemic, $43. They worked that up to 123. Now, holding the line here at 89 over 5 years. Let's see what has happened to the fundamentals over time. Fortunately, I have to kind of assess on the fly with this. P of 20, relatively in line with the past. Price to sales of 2, that's in line. If I had to guess, in a 2-second thing here, this is a proper valuation currently minus whatever happened today. And I cannot, let's see if these goofballs on the message board. Nothing there. So unfortunately, I don't know what happened with Logi. I'm going to check one more place and then move on. Latest news. Yeah, I got nothing. So they may not be reporting. If they're a West Coast company, they may be doing 4 o'clock on their time. I have no idea. Conquer 14 is Zoom a good stock? You can stop posting that 12 times, by the way. Zomedica. Sorry, I don't know anything about it. Penny stock. No, we don't do that here. Sorry, Conquer. Go to the next penny stock board. AMD rally will continue. That's one I will be watching. And this is from A Team Possible. We're waiting for tomorrow on AMD. Here is year to date. This stock I thought was a really fair deal at 100 or just under for the long term. It looks like people are getting excited here recently to get it under. Let's take a look. At what the expectations are very quickly. All right. Estimate for this year, 251. Where are they at right now? So if this, I don't know if this is true or not, but Yahoo has the EPS at 284 over the last 12 months, and the estimate is in 251. So that would actually be, let me check something else here. Yeah, something's not right on the Yahoo front page of AMD. $129 last year, 249 slash, 250, 60, 307 next year. So let's just start with 249, and that gives you, one second, 122, 250. So that's a PE of 48, which isn't terrible. Now, in the chip sector, though, that is pretty high, but it's not nearly as high as NVIDIA. Revenue, and this is the game that's been changing for AMD, and this is what they have to continue to do. All right, so this year plus 60%, you know, that's a huge year, and I think they'll probably get it. I don't know what sort of supply constraints they're looking at. What was funny is not too long ago, next year's projection was in single digits, and I'm talking like 1 to 5%. And since they've outperformed, you've got this going up to 17%. So I think there's still time on AMD, if they keep outperforming, to really raise this number and surprise a lot of people. The problem in the short term is, you know, you have to keep cranking big numbers, and they're not necessarily projected to do huge numbers. You know, you got double digits. This is awesome. 16%, 13%, 10% on revenue, right? The highest valuations for stocks like this, you really got to be in the 20%, 25, 30%. That's where you're going to get the highest valuation. So you have to wonder how sustainable this is for the short term. I think if you buy AMD today and you hold it for 5 years, you're going to be happy, right? Just with the progress that they've made. I think the CEO is key. So blessings to her, because you don't want to lose her. However, from a look at today, I'm not buying at 122, even though the earnings could send the price higher. I think one of the things you see with AMD, as someone who follows it, doing 1 year, you're guaranteed to get some ebbs and flows, right? And this is in a year of limited volatility. And you see just chip sector in general is full of negative headlines, not AMD negative, right? But just chip negative in general, like oversupply, pricing, supply chain, etc. So just be patient. If you own it, hold it. Keep rooting for it. And if you're interested in it, I would just be patient, because I think that anything in the chip sector, you probably are only 2 months away at the most from a negative headline bringing the price down on whatever it is you're targeting. All right, guys, I got to run, and I just want to say what's up to Samath, who talked about the Facebook share repurchase. Thanks for sharing that. Adobe, I'll talk about it another day. Eric Lee, apps earnings, haven't seen it yet, so I'll try to catch that on the next one. But thank you to everybody who came out for the live stream. It should be an awesome week. I'm super excited to watch the rest of these earnings come in. So I hope your stocks do well, and we'll see you on the next video.